Hi everyone, what a day today, another very volatile day. We did go a little bit higher like we expected, and then we gave it all back, finishing down 1.5% on the session, and after hours looking not so good there. So everything looks bad. Once again, we'll take a look at the short time frames and see if we can find any variation on that thesis. But right now you can see the critical level, the key pivot point from back here, April 19th at that 488.68 level continues to be the very important level. If we get below that, things could get quite terrible quite quickly. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we got Treasury Secretary Bassett coming out and saying China made a big mistake raising their tariffs as a retaliation against ours. Bassett expected the U.S. to make a good deal with its trading partners. I'm not sure this was really in good faith. China, of course, was not going to take it on the chin, but China raising tariffs. They said, what do we lose by them raising tariffs? We export about 1/5 of what they export to us, so that puts us kind of in the driver's seat, which is fair. That's fairly true. But now we're having a trade war at this point. The tariffs are going up higher on both sides. We're now at like 100% or 106% now, as the White House retaliated against those tariffs with China. So China retaliated, and now we have retaliated against them once again. And of course, President Trump came out and threatened another 50% increase as the U.S. ran a $300 billion trade deficit with China, which is definitely substantial. It's going to be interesting to see how this one continues to play out. The other thing I wanted to highlight here is a lot of these tariffs are actually going into effect tonight at midnight. So you got trade imports being tariffed at midnight. And that includes the one we just talked about, 104% on China. It'll be interesting to see how these things go up overnight. Are we actually going to see this start to propagate through the economy? How much is the economy going to be affected by these tariffs? So far, it feels like a lot of fugazi, potentially. We don't really know exactly what it looks like, but it seems like soon we're going to start to see the real effects of these tariffs on the U.S. economy. Moving over to fear and greed, this has not moved for several days. We've been locked at a 4. You can see this continues to fall here, pretty close to that 5,000 mark. It looks like the S&P's dipped below it on a closing basis. Strength and breadth obviously continuing to be an extreme fear. Put call ratio continuing to spike up there. Let's see, we got to a 0.99. It looks like not quite to the 1 level, but just about as high as it goes. And then the fear indicator volatility, the VIX is up in the 50s. So is that a peak fear number? Certainly close in my opinion, but again, remember this is a fundamental change to the economy and to the markets, which means to me that the indicators just don't hold the same weight as they would in a purely technical way. Moving over to the economic calendar, 3-year note auction came in just a little bit lower. You actually like to see how well that came in, not dipping too much lower than the previous numbers. So markets maybe not panicking all the way quite yet. Tomorrow we have the 10-year note auction. That one's going to hold more weight, as well as those FOMC minutes in the afternoon. That's going to be interesting as well. And then Thursday, the big one with CPI. Definitely want to see how inflation gets affected. Inflation has been going lower, and you can see the core number year-over-year expectation is another step down to 3.1. Month over month stepping up to 0.3, and then the headline number all the way down to 2.6 from 2.8. So that would be another really, really good move on inflation if we could actually meet that forecast. And then, of course, we have the PPI on Friday and all of the other consumer data and inflation data from Michigan. Moving over to the charts, you can see this trend line continues to hold. That trend line is now sitting up at the 484.80 area in terms of price. We're still extremely oversold at a 21.59. We were up really well on the session from the close yesterday. We were up as much as 4%, and then we gave all of that back, finishing down 1.5%. So really wide ranging day. All of these have been really wide ranging days. But as long as this support continues to hold, I think markets have kind of bottomed in here. You can see this really critical low back here from April, like we talked about on the intro. That is the level that I am watching. If we get below this, things could get pretty significantly worse. Your next real pivot point would be back here, July of 23 in the 448 area. You do have this pivot point back here, December of 21 as well in the 456 area. So if we did fall from current price to that, that would be about another 6 to 7% lower. That next pivot, it's about 8, almost 9% lower. So critical zone in there, but really we're watching this right now. And then in terms of levels and the short time frames, I've been working on cleaning this up a lot. It still looks kind of terrible, to be honest, but there are so many pivots that are important and levels that are important. You can see this one here is what we're watching, the 448.68 level. I'm starting to make some of these more important ones a little bit darker and then have the kind of intermediate ones a little lighter. Trying to spread them out a little bit, but markets make a lot of key turns, and you can see it here, 488. Rallied up, got back above 517, so that was interesting. We held that for a little bit, back above the 55 EMA. And then we got news about retaliatory tariffs, more China tariffs. And obviously that didn't go well for markets. They did continue to go lower here. The interesting thing for me still on this hourly chart is you can see this low with the higher low setup here still, even with the after hours price action. And then look at that RSI read. The RSI read right now is at a 32.2. The RSI read from this low was back in the kind of 12.5 area. So you have similar price action with a significantly higher low on the RSI. Really, really clean divergence here. Can we get a higher low setup and a bit of a rally through and then a push maybe into the 550 area? That would be crazy. Super, super bullish. Obviously, we would probably need some kind of news for that to be able to happen, but think about it. Think about this divergence, watch these key levels, and see what we get tomorrow. Moving over to that weekly chart on the Tasty charts, you can see that 144 EMA. We are back below it here on this weekly chart. Obviously, the week is not closed yet, but we are below it right now. That's at 499.08. If we close below that, that definitely makes me a lot more nervous. I was hoping to close above that on the daily chart today, and that did not happen. We closed at 496.84. So right now, this looks like a gap down kind of retest. Potential for a continuation lower here, at least in the short term. And then look at that here on the daily chart. Tried to get close to that 9 EMA, tried to get close to that 8 EMA at 527.82. Very, very close, and then immediately sold off after getting into not as oversold conditions and then still closing extremely oversold. So you still have to assume that we are extremely oversold, but not able to really regain any of that strength in the short term. So that is very concerning. Markets are still looking to the downside, in my opinion. Moving over to the NASDAQ, really similar thesis to the SPY charts. We're looking at this same low back from 19 April. Is that going to hold? We're right at it right now, 410.88 in the after hours. We're down $6 or so in the after hours, continuing to fall. You can see the wick low there is 410.56. And that is where we're at, 410.57, almost to the penny at that low. If we gap down and fall through there, you can see some kind of consolidation in here, maybe the 392 area. Either way, this continues to look terrible. Obviously, it's super extended, but when you have fundamentals driving markets, they can continue to run to the downside. And then putting on those levels, that 411.43 level is what I have for that major level. That's closer to the closing price from that 19 April candle. You can see it in there. And then I do have an intermediate level in the middle of that consolidation. And then the low of the consolidation is my next major one here at 393.31. You can see this here in the after hours price action, just continuing to straight downtrend all day after peaking really early in the session, rallied up on that 10 o'clock candle, just barely touched the wick from the previous day on that wick high, and then immediately sold off, hunted those stop losses, hit that liquidity, and then continued to run here to the downside all session. And then after hours, again, below 411, I'm assuming that we're going to get to that 393 area. So from current price, you should expect a potential for about another 4.25% move to the downside. Maybe there's some buyers in here at these kind of wick lows. I do have an intermediate level, but I'm going to put less weight on that. I think 393 is more in play. And just as a reminder, same as the SPY charts, you do have a lot of divergence here on the hourly chart. Not really buying that, but it is something to keep an eye on. Moving over to the Tasty charts here on the NASDAQ, you can see we are below that 144, same as we saw on the SPY charts. That is now at 418.49 on the weekly chart. We're at 416 on a closing basis for the day, and then after hours we are continuing to slide. So gap down, retest, continuation lower by the looks of it. And then looking at that daily chart, came up, tagged that 8 EMA, 444.09, very close to that level, and then immediately sold back down almost to those lows. And then in the after hours, we are starting to take out those lows. So big selling after the touch, continuation lower by the looks of it. Moving over to the Russell and the Dow. The Russell is down 3.5% on the week, and again after hours we're down even more, about $3 in the after hours, taking out the wick low from that candle. At this point you have to assume we're probably headed to that 170.35 level. That's this kind of consolidation low, and then below that you have these wicks to that 167.50 area. And then looking at the Dow, same thesis as everything else, just continuing to waterfall waterfall off in the after hours. We assumed that we were going to get the sell if we did get the continuation higher, and both of those seem to be playing out here. So you can see these lows here, 15 April, the level for me is that 373.47 area. You can see that consolidation high here, the wick lows to that level. We're not taking out the lows the way that we are on the Russell, but if everything continues to sell, you have to assume that that 144 EMA is going to be in play around the 361.35 area. Moving over to the Mag 7, same thing as everything else. It was up a lot and now it's down 2 1/4. And then after hours, we're getting close to that 230.52 level. The next one's going to be 217.46. That takes you back to this kind of consolidation low. Back from the 25 April timeframe, that would also take you very close to the trend line in there. We'll see if that zone becomes relevant or not. My guess is that we're going to break 230 tomorrow, which means 217 is in play. Moving over to Apple and Microsoft, we'll just continue to talk weekly charts here because that's the kind of movement that we've been seeing. The next level is 165.71, takes you back to this consolidation low, 15 April. After hours, it's selling about another $3. Expect to touch that at least tomorrow. Momentum RSI obviously oversold, but again, fundamental move, expecting to take out this low here. And then you have to look at this kind of consolidation range in there, 154.50 or so, 146 in play for tomorrow if that 165.71 level breaks, which again, I do suspect that it will, unless we get some kind of change to the thesis, which I am not expecting as of now. And then looking at Microsoft, again, selling about $5 in the after hours. We're right at that 144 EMA, 347.78, and then the 200 there at 330.69. So that would take you back to this consolidation range from kind of June of 23 up until about October of 23 before we had this massive run. That could be an interesting zone. You can see there's a good amount of volume in here. We were out of this volume here. We're looking for this volume range here. And that seems to be where we're headed. Moving over to Tesla and NVIDIA. Tesla is now down 7.3%. Again, after hours, continues to waterfall off. The level is 214. So far, that is intact. We'll see if it gets below that tomorrow. If it does, my next level is going to be 197.75. And then you got NVIDIA selling off after hours down about $3. The level was 95.74. In the after hours, we are below that. The next one for me is that 90.69 level. We haven't quite touched that yet. We're going to see if we touch that level tomorrow. Again, it's going to be in play, in my opinion. I think we're going to open below 95. 90.69 could be in play. And then below that, I have the 80.03 level, this kind of consolidation gap through area here. So certainly in play, waiting to see what happens tomorrow. If we get that waterfall sell, I think 84 likely to get tagged at least once. Moving over to staples and discretionaries. Both of these had terrible days as well, 1.5% and 2.33% respectively. Continuing to see that selling. We're about to take out the low from January of this year for staples. 75.40 is in play. It's been in play, but we tried to go higher. You can see we tagged 78.88. That was the key pivot point here. Touched that and immediately sold off back to the lows. We're now taking out the lows from the previous day. If that goes, then you're looking for kind of 74, maybe as low as 72. Staples not holding up in this market. Nothing seems to be. And then you can see discretionaries right back to the lows as well. The next pivot is around here, around 170, and then below that you have 166.78. Kind of a weird bottom there, right? So you gap down and then rallied in. Usually that leads to rallies. That's kind of what we were hoping off of yesterday's price action. You can see gap down, huge extension, led to a substantial rally higher. Obviously, this is not the same environment as we saw in that time frame, but that's what you would usually look for in a kind of bullish structure. Right now, obviously not so much at all. Looking for that 166.78 area. We'll see if that zone holds or not. Moving over to breadth, 20 and 50-day breadth, you can see still at these critical lows. 20-day right at the 2.3 area. It just doesn't go much lower unless something really crazy happens. This is as low as it goes. Again, that doesn't mean that a market bottom is going to happen immediately. You can hover in these zones for a while. You can see week to 2 weeks absolutely can happen. Some of these were a week to 2 weeks as well. So we'll see. Can we hang out here for a while? Absolutely. Can it go lower? Not really. And then similarly here for 50-day, we have now taken out this low here. all the way down into the 5 range. It looks like we're probably going to touch that 2.75 area. If we get here, those are some of those lows where you just don't see it very often. You can see back here, September of 22 ended up being a buying opportunity. Again, you can still hover here for a while. First touch was the 23rd. We didn't really see a rally out until 3 October. So we were here for a while, close to 2 weeks, and then we ended up starting to see rallies out. You can see the push up. We still got some kind of a retracement before rallying out into those kind of peak levels, but keep an eye on this. It is extremely low, even with the fundamental moves. There's just not too much lower that it can go. Moving over to bonds. Bonds continue to sell off, looking for that recession. Interesting to see how much these are selling off, in my opinion. I just do not think these lows are going to stick around. Markets are looking for rate cuts. Even in a recessionary environment, that should lead to more cuts, which should eventually drive up bonds here. So if yields go lower, bonds should be rallying. But right now we're seeing yields go higher, which is not really what we should be seeing. Even with the tariffs, I just don't expect inflation to be going too much higher, but we'll see how it plays out for the Thursday inflation read. If inflation goes lower, this should be a really, really good buying opportunity, and we should see bonds take a hard pivot to the upside. We saw the 3-year note auction come in well. Government bonds should be appreciating here, but for some reason, yields must be going higher and bonds are not. Moving over to volatility. Volatility for bonds and equities continues to go higher and stay higher. This is a new high for the VIX. We closed at 52.32. The wick high is not higher, but the close is obviously super extended, obviously very close to these highs. Can it go higher? For sure. Will it stay here forever? Probably not. And my guess is the move index is probably going to go a little bit higher, touch these levels, and then we'll start to see some retraction from there, especially once we get that CPI read. And if it does come in line with expectations, we should start to see this roll back to the downside. Moving over to my accounts, I actually made some pretty good money trading in and out of some positions. I rolled up into the rally early and then took it off just short of those all-time highs for the day. And then I actually got short into the dip low. So I had some pretty good trades on the session. I didn't hold anything into the close. I was actually looking at that kind of 411 area as a zone that might hold. Fortunately, I did not do that. As you can see, the Qs are just continuing to waterfall off here. 409, well below that 411 area. 416 was the close, so more than 1%. You can see 1.8% or so continuing to sell off. No positions going into the close, except for this government bond position that expires here in May. Just a yield, just holding those bonds to expiration. Not trading in my IRA. I don't think there's any solid bottoms, and short-term trading mostly to the downside in my individual account. Let me know down in the comment section what you thought of the markets today. Did it do what you thought? What do you think of the ramp up in the trade war with China? Is that going to continue to drive markets down despite the massive oversold conditions? Put it down in the comments. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.